Good evening. Today it is Saptomi as per the Bengalis. But I have already come back to explain you the final account. It is already night 12 o'clock. I will do one final account in front of you which came many years back in the intermediate of CA examinations. Final account of proprietorship account is there. I will give you one link and you can take the printout or take the screenshot of that link and you can check the item I will spell and then I will draw trading account, profit loss account as well as balance sheet. Now remember I have told you trial balance comprises three types of account. Only nominal accounts are closed in the trading account and profit loss account. If they are direct in nature, they are placed in the trading account. If they are indirect in nature, they are in the PL account. If they are personal account having debit balance and all real accounts on the asset side and personal account having credit balance, they will be placed on the liability side. Okay, let's start. I'll say one after another. Let me draw out the trading PL and balance sheet. Now this is trading account, say. This is PL account, say. This is balance sheet. I like trading account, in short TRDG, trading account. Profit and loss account for the year ended, profit and loss account for the year ended. I will spell it. Now here balance sheet as at, I will say the dates. Let me check up. Now Rgem Honda has extracted the following trial balance from the books. So I have to write the Rgem Honda has extracted following trial balance from his book on 31st March 2013. So trading account for the year ended 31st March 2013 and also for the year ended 31st March 2013. Balance sheet as at 2013, that is 31st March 2013. Now first drawing account. Trial balance is given. And various adjustment given. Let me spell drawing account. Drawing account, personal account having debit balance. So on the asset side, instead of asset, we deduct from the less drawing. 10,000 given in the trial balance. So here I will write. Sorry, 16,000. 16,000 here I will write. From capital we add net profit, then drawing is deducted. Cash, that is cash in hand. Petty cash, cash is 6760. Petty cash 1000. So in the balance sheet I will write cash in hand. Cash is 6760. Petty cash. Petty cash is given 1000. So total is 7760. Now leasehold land 20,000 under fixed asset. If we say that fixed asset, leasehold land. How much? 20,000. Inner column I write. Certain adjustment is there. I am picking up one empty item from the trial balance. Now opening stock, market value, cost is 53,000, market value 50,000. Now market value is given in the debit column of the trial balance. So here in trading account, to opening stock. Cost price is 53,000, which is given in the packet, and on the debit column 50,000 written. So I'll write 50,000 here. Now listen, closing stock is valued at cost or market price, whichever is lower. This is called prudent concept. P, prudent concept. Various concepts I already discussed. Now salary account given 12,000, Sunday debtor 50,000. Now salary account in trading account, indirect expenditure to salary. Salary account 12,000. Now Sunday debtor 50,000. Here I will write Sunday debtor. Inner column I am writing 50,000. Now wages 40,000, direct expenditure. I will write 2 wages. 2 wages 40,000, inner column obviously. Certain adjustment might be there. Now bank is 21,000. So above cash there is bank balance, so we will write cash at bank. That should be 21,000. Inner column, right? Let me write now 21,000. Now capital account is 34,000. So opening capital or capital account should appear in the trial balance as of 1/4/2012. So it should be 1/4/2012. How much given? 34,000. Sorry, this is the profit loss account. I write this in the balance sheet. I was thinking balance sheet. This is capital account. That is opening 34,000. Obviously, this is 1/4/2013. This capital account 34,000. Now, rent is 9,000 given. Indirect expenses to rent 9,000. Now, electricity 6,000 to electricity, indirect expense. $6,000. Now you are given motor car. Motor car is fixed asset. 10,240. We write motor car. 10,240. Let me check. 10,240. Now advertising 9,000. Indirect expenses to advertising 9,000. Now let me check Sunday debtor 35,000. Sunday creditor 35,000. Now let's see any adjustment there we can put inside also. Now debit balance purchase 4 lakhs to purchase 4 lakhs. Now postage and telephone 3,000 to postage and telephone 3,000. Now sales 6 lakhs. Direct income, only one item direct income by sales 6 lakhs. I do it very quickly. Now discount, debit balance, that is discount allowed. So to discount, better is we go through the adjustment twice before starting the sum. The item which appearing in the trial balance, if we find certain adjustments there, then we can put those items inner column, and after working or the adjustment is done, we can put the same thing in the outer column. That is net effect. Here I think discount allowed 11,400, certain adjustment is there, 11,400. I think. If not there, I will write here. No problem. Then general charges 4,000. That is also expenditure indirect to general expense or charges 4,000. Would be certain adjustment. Then petty cash expenditure 9600 to petty expense 9600. Now suspense account given. I'll open up suspense account. Suspense account 10,000 given. That means there were difference in the trial balance, and trial balance, the difference was put into the suspense account. It is given in the credit side, so we will write by balance brought down 10,000. Now after rectifications, at the time of auditing or if you check before preparation of final account, if certain mistake is there in the accounting process, then those mistakes to be written down fast, and after passing the suitable journal entry to nullify the effect of the mistake, we can nullify this suspense account. Suspense account will be no more. If however the suspense account still continues after preparing final accounts, if it is having credit balance, then we will show on the liability side. This is the left hand side of the balance sheet liability side. If it is however the debit balance, then on the asset side. Remember, in some enterprise we find suspense account 560 or 2,900 rupees, something, and it continues from year to year. So it could be there because there was certain mistake was not found, so suspense account continued. However, certain accountant they prefer to write off debit balance on the profit loss debit side and credit balance on the credit side. But obviously not on the same year. It could be like depending upon the amount in the very next year, or could have been in the year to year. If you put on the credit side of the profit loss account, then the profit will increase for next period. Debit by the similar amount, it will decrease or diminish your profit. Now let's see the adjustment. First adjustment given. Closing stock market value on the 31st March 2013 was 80,000, but cost price given 75,000. Now prudent concept, again I say you prudent concept. Closing stock is valued or to be valued lower of market price cost, whichever is lower. To be valued at cost or market price, whichever is lower. That is the prudent concept. That means when you lower the value of closing stock, gross profit automatically diminishes. Now each adjustment must have two effects, because now here we are passing the complete journal entry in the journal proper. I'll explain journal and journal proper and cash book later on, little bit. I am assuming people are knowing, but those who want to refresh or want to know more, for them I will must prepare one more video. Now myself, Ratan Mukhopad is explaining you the final account on behalf of Rgem. Now, closing stock 80,000, 75,000 cost. So here I write by closing stock. 75,000. So journal entry closing stock debit. So closing stock 75,000 should appear in the balance sheet. Debit, trading account credit. Closing stock debit, trading account credit. Next journal entry. Now, petty cash balance represents the month-end interest amount. On the closing date, the petty cashier had voucher totaling to 400 for which had not been received or reimbursed from the head cashier. Now, what is petty cash? Let me explain. Head cashier generally engage with the more important cash transaction and small transactions of minor values to be entered by the petty cashier in the petty cash book. Now, petty cashier we maintain in the columnar form. Different columns are there. Different expenditure are put in their respective columns, and individual columns are summed up, and total expenditure we find out. Now, from time to time, we say impress system. That means whatever the expenditure incurred for each month, say, or for each week, say, that is reimbursed by the head cashier when it is vouching is done by the petty cashier to the head cashier. So the petty cashier start with the next period, for the next period with a similar cash amount. For example, I am petty cashier, I have given like 1,000 rupees. So for each week I am given 1,000. Now if I total expenditure on account of postage, stationery, etc. I suppose expended 400 rupees. I inform on the Saturday, second half, the head cashier, total expenditure for the period is for this week is 400. So please reimburse me. But on the last date, it was told by me to the head cashier had not paid me. Now, head cashier, however, I have passed the entry for the respective expenditure. So my expenditure is still there, but my petty cash is not being maintained with the similar amount. Now, while trial balance have been drawn, the cash amount which is showing in the trial balance, that is not considering the petty expenditure, 400 rupees. So my petty expenses, discount, postage, general, salary, date, electricity, petty expenses 96. So it should be 9600 plus add 400 petty expenses, not voucher, not considered. So this is debit. So this should come as this 9600 should be plus 400. So it should be 10,000. So my petty expenditure is 10,000. Petty expenditure is 10,000. This is debit and cash in hand less. This is less petty expenses. Cash in hand credit. So 400. So it should come like 7760 minus 400 should be 7360. My cash in hand is 7360. I am passing one complete double entry. Petty cash expenditure debit 400, cash in hand credit. Okay, next item. Item number 4. Third. Discount allowed amounting to 1,000 had been posted to the debit of the debtor accounts. Now, debtor is 50,000. Now, discount allowed 1,000. Now, debtor debit balance. So, when he allowed discount debit, that is my expenditure, debtor account credit. But I have debited debtor. While posting means from journal to the correct ledger account. Have to make posting. Journal entry is discount allowed debit, debtor credit. While credit I am transferring, I have put in the debit side. So this causes also differences in the trial balance due to the misposting. So less discount wrongly debited, wrongly debited 1000. So now credited and for then credited. So it should be 2000. So your actual debtor figure should be 48,000. Now remember, this will cause difference in the trial balance. So my journal entry in the after preparation of trial balance, my journal entry should have been suspense account debit to debtor. Debtor accounts 2000. So suspense is now reduced by 2000. From 10,000 credit it is reduced. Due to this mistake, my debtor now actual debtor is 48,000. Would have been actually it was 49,000. So instead of getting 1000, I debited. So total 2000 increase. Now next entry. Cash withdrawn from bank 4000 had not been entered in the bank column of the cash book. Now, cash withdrawn by whom? Myself? No. Yourself? No. By the proprietor only. If anybody else of the enterprise would have said. Nothing said means who can withdraw? Have the power to withdraw? By the proprietor. So, I have not made posting. That is from proprietor credit. Bank account credit side, I have not entered. I have entered on the debit side of the drawing account, but from there, I have not entered on the credit side of the bank column. Now, cash book, sometime under double column, cash and bank, both columns are maintained. Now, on the credit side, we have not put means this will cause a difference of more debit in the suspense and the trial balance. So difference is put in the suspense account. So now journal entry should be suspense account debit to bank 4000. So cash at bank will reduce by 4000. Now entered with drawing entered 4000. So cash at bank was 21,000. Now it will reduce to 17,000. It was 21,000. Now it should reduce to by 4,000. 21 minus 4. It should be now 17,000. 4,000. So it is 17,000. So two journal entry: suspense account debit, bank account debit. Next, sales amounting. Sales account has been undercast. Undercasting means day books. While we are summing up, we have undercast. That is, we added sales account less by 4,000. So it also causes credit side less credit by 4,000. So debit came in the trial balance automatically moved by 4,000. So suspense account appearing. So journal entry should be suspense account debit to sales 4,000 and sales also debit credit. So add undercasting 4,000. So actual sales figure is 6,04,000. 6,04,000. Now let's see. Sorry, some number adjustment entry 5 and adjustment entry 6. Motor car which is purchased on 2019 had been depreciated 20% on the reducing balance method. Original cost of the car 20,000. So 8,9. So 1 year, again 1 year, again 1 year, 3 years depreciation over under 20%. Now in the books, motor car appearing 10,000 to 40. So remember, your original cost was 20,000. Now less 10,000 to 40. Sorry, 240. So here 60, here 1. So here 7, here 1. So 9760 is the written down value as per diminishing balance method. I will discuss depreciation later on. Now, now it has been decided to depreciate the same on 6% on the straight line method. That means first I have to write back 9760 so that it must come to its original position. Motor car is there, so 9760. So here add over depreciation. How much? 9760 or 9760. Say, or I can adjust here 9760 actual depreciation charge during these 3 years. Now, what should have been depreciation for all 3 years? That is okay. 8, 9, 9, 10, and then 10, 11, 11, 12. This is 12, 13. So for 3,000 depreciation should have been 20,000 into 6% is 1200. So actual depreciation 1200 into 3 years 3600. So if we say take the difference, this is 0, this is 6, this is 1, this is 6. 6160 over depreciated. So generally it should be 6160 over depreciation, 6160 over depreciation debited and PL credited by over depreciation. Depreciation written back 6160. I have to get this correct figure. So in books it should have been this is 6, this is 1, this is 2, 1, 3, 1, 4, this is 13, 400. Now see, remember 6% of 20,000 is 1200 for 3 years into 1200 each year. So 360, original cost 20,000, from there if you deduct 360, you get this figure 17,400. So current year depreciation is less, depreciation for current year is 1200, so it should be 400 minus 200 is 200, and then it should be 16,200. It should be 16,200. So 1200 to depreciation on motor car. On motor car, 1200 for current year. That is 6% on this. Now, some adjustment number 7. The leasehold land purchased on the beginning of current year on the date of purchase unexpired period for 5 years. So leasehold land to be depreciated or amortized. Less amortization. We'll let amortization 4,000 each year. So we have to write off this 20,000 over the period of 5 years. So 16,000 value still there. So after 4 years, next year onwards, that is on 1/4/2014, it will run there. So that is the way to amortization. Amortization of leasehold, less 4,000. So what next is number 8 adjustment. No entry has been passed in the purchase day book for stock withdrawn by the proprietor. So simple, drawing account debit 10,000. Trading account credit by drawing 10,000. You could have deducted from purchase also. Both possible. Now next, telephone bill amounting to 1,000 remain unpaid. So telephone bill, whatever postage telephone 1,000, so 3,000. Add outstanding 1,000. So this should have been, instead of 3,000, it should be 4,000 now. 4,000. And here outstanding expense, telephone expense. 1000. So journal telephone expenditure debit 1000, and so it become from 3000 it become 4000. General expense saving 4000. General expense 4000 there. This is 1000 and general expense 4000. So your telephone expenditure 4000, general expenditure 4000, discount allowed is 11,400. It should come in the outer column. So I'll write 11,400. With that discount allowed posting, it has nothing to do with this. And then depreciation 1200, salary 12,000, net 9,000, electricity 6,000, advertising 9,000. Some adjustment was there, I think, in the advertising. Oh, advertising cost include the campaigning run during the year 6,000. It should affect at least for 3 years. So in 9,000, 6,000 one expenditure, one campaigning there, and that 6,000 should run for next 2 years more, including this year 3 years. So less unexpired, 2/3 of 6,000, that become 4,000, and so your actual advertising expenditure become 5,000. And here I will write unexpired advertisement. Unexpired, campaigning, 4,000. So next year 2,000 to be written off again next year. Now balance sheet should match. This is working portion. Balance sheet should match. Trial balance, now it is okay. This 10,000 close. No more suspense account is there. So everything is over. Trading account, first I will find out the gross profit. Let's start. 6 lakh 4,000 plus 10,000, 14,000 plus 75 plus 14 is 79, 89. So 89,000. 6 lakh 89,000. 6 lakh 89,000. Now wages is 40,000. This will be 90,000. 4 lakh 90. 490. 689 minus 490. So 9 continue. Here again 9. Here 199. So gross profit is GB is 1,99,000. GB carried down, GB brought down by GB, gross profit 1,99,000. Indirect income 6160. 6160 total expenses. Let us add the expenses. 11 plus 4, 400 living. 4, 4, 8, 8 are 11, 19. 19, 1, 20. 20 plus 32, 32 plus 9, 41. 41 plus 6, 47. 47 plus 5, 52. 52, 62. 62 plus 4. 62 plus 4, 66,000. Now let us pick up 100. 400 plus 200. No more 100 there. So 600. 199. You put there 2 lakhs 5,000. It's become like 2 lakhs. 205 160. 205 160. 205 160. 205 minus this 40, sorry, this 60. Acha, we take the difference. So what should we put? So that comes 60. If we put 60, 0, 0, 0, 0 plus 6, 6 plus 5, 1, 1 carry forward, 6, 1, 7, 7 and 8, 15, 1 carry forward, 6, 1, 7, 7 plus 13 is 1,38,560. Add NP 138,560. 138,560. plus this 0 0 0 0, this is 6 6, this is 5. 172 560. Less drawing. This was 16 plus 8 26. If we deduct the drawing, this becomes 0, this becomes 6, this becomes 5, 6. 1 can put 1, 4, 146. 146 plus 35, 136. Okay, 560, 560. Then 1000 ka 11, 11, 112, 2, 1 carry forward, 4, 437, 18. This is 182. Is there. Carry you add up, you get 182. 560. Please add up. 560, 360 there, 200, 200 there. 3 2 5 60. 360 plus 200 560. 16 16 32 32 plus 39, sorry, 32 plus 75, 32 75 7 10 107. It's become 107 200. 107 200 plus this become 48,000 plus 48. 107 48,000 plus 17,000. 172 up to this 172. 172 plus 171, I think 171. It should come 182 560. Now this is all. How do we prepare? Now you can use the calculator for summing up 199. Let me check the answer. Gross profit 199, net profit 138 560. Obviously, and balance sheet 182 560 is coming. 7360 is coming only. Okay. 16th. Okay, so we have understood how to prepare the final account in one shot. It's very easy. You have to have like practice little bit practice. If you do, then there is no worry. We can do the final account. I'll be discussing certain adjustment and as well as the previous chapter like cash flow, rectification of errors, trial balance after preparation on Thursday, second stage. How do we prepare? Okay, good night. Before saying good night, I'll say I'll do one more video on the financial management next time.